Hi everyone, this is Paul Lange from DTS, and I want to introduce you to what you're about to watch. This is a 30-minute long presentation. It's a DTS Impromptu event. It was presented live to the free members of Discipline Trading Strategies. This is called Tightropes, Oil, and Psych, and it is really just 3 quick one-hit topics. Impromptu events are meant to be shorter presentations that take the place of emails. These are some quick topics that I wanted to get across to people. I think you'll enjoy them. You'll have to find out what they're about when you tune in. If you enjoyed this event, be sure to check out the many other educational events, articles, and Trade of the Week videos that you can get access to at the DTS Free Stuff page. So for now, sit back and enjoy this event. Good afternoon. Hi everybody, sound check. I heard myself. How's everybody doing out there? Hey everybody. Sorry, I am 2 minutes late. I have not been 2 minutes late since May 12th of 2021. I apologize for that. I just could not get the camera to work. I couldn't get the camera centered. Good. Hi, everybody. And I cannot add that time on. We have to be done at 5:30. That's the rule with an impromptu session. So I'm going to get right to business here. This is not the normal full event. This is an impromptu session. It was not on the schedule. It's not on the calendar. I just called it yesterday. And there's a variety of reasons for doing the impromptu. It's kind of what I call, well, let's look at the slide. I think it says it right here, doesn't it? It doesn't say it right here. I thought it did. But it basically is kind of in between an email. You know, I send out a lot of educational emails, and sometimes it's maybe too much for an email, but not enough for a whole hour. And this is a little different one because it's kind of 3 different topics. So it's called Tightropes, Oil, and Psych. And if you're trying to figure out what that all means, it's 3 separate things. You could probably figure out 2 out of the 3. I don't know which 2. So I'm going to go through each of these as 3 separate topics. There's 3 separate topics. They involve news, that's the oil. They involve charts, that's the tightrope. And guess which one Psych is? It's Psych. Hopefully these are nice educational little events for you. And I think next week we have the regular event coming up, right? I think it's next week. It's typically the first Wednesday of the month. Maybe it's a delayed a week, I'm not sure. Check the calendar though. Let me know. So intro comments. I have nothing else to say. Let's get going. Oil, number 1. So this topic on oil is about news. And as you know, part of what I do a lot is try and make sure people don't focus on the wrong things. And one of the challenges always for me is that we as humans, you know, we like to listen to news, and you should, you know, as a person, as a human being, you want to hear things. You should probably listen to a variety of news stations so you get a fair view of what's going on. But as traders, we don't want to listen to the news. And I know that's hard to do. That's right, Andrew. It's hard to do that. You know, if you post that again, Andrew, when I get to Psych, I'll have a comment for you about that because it's not really true in a sense. So post that again later. And I've made the point so many times about how listening to news and stuff is just bad for you as far as a trader goes. Again, as a human being, do what you want to do. For me, I can listen to news because in terms of being a trader, I laugh at it because I've come to understand, like many of you have, how silly it is. And I don't have time, and I've done it in other presentations and in some of the podcasts I do. I've gone through the concept of why news is so distorted, why some people think it works, why the news shows have to present themselves the way they do. But there's just such a great glaring example lately on oil. And again, there's no trade involved here. I don't trade oil specifically, but obviously, it just caught me, and I decided to do a little thing on this because it's such a great example of what I talk about all the time, that if you try to listen to news, to economy, to economics, to whatever it is, and figure out what the meaning of it is to do your trading, you're going to lose all the time. I mean, almost all the time. It's just completely backwards most of the time. It doesn't always seem that way to you, and the reason is because after the fact, people come on and they explain to you why you're so stupid and why you didn't understand what just happened. But yet nobody ever does that forward looking. And oil is just a great example. So we had the fundamentals of oil, right? Go Google this is right from IA. Go Google yourself. You know, what is oil? What happens when you have a war to oil prices, right? And it gives you all the reasons why oil prices are going to rise and rally, et cetera, et cetera, et cetera. You don't have to read all that. But notice this one here, though. This specifically, you know, about Iran and the Strait of Hormuz. I'm not sure I'm saying that correct. But, you know, a big waterway that I guess 30% of the oil in the Mideast goes through there, blah, 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 whatever it is. And the threat of that closing, oil prices are going to take off. That's all there was to say about oil prices continuously, right? So when the U.S. attacked Iran, Iran threatened to close the Strait of Hormuz, right? Blah, 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 blah. What would you expect oil prices to do? Well, there isn't a person on the planet that said they would go down. And find one for me. Go Google, look for it, not beforehand, right? And what happened, of course, is when the U.S. attacked, guess what happened? Oil prices plummeted, right? You've heard that, you saw that. They just absolutely, positively plummeted. So why did that happen? Anybody know? Does anybody know why that happened? Nobody said that is what was going to happen, right? Everybody said, well, obviously oil, war, oil prices are going higher, right? If you listen to the news, the typical news station will always try and cover their butts. Don't know, Lou. I have no idea. It just the point is that's what happens. The point is, well, a lot of it, always turns out to be a lot of times the answer is that things are built in, and that's why we look at charts. Things are built into the price already, right? I hate to tell you, but a war in Iran is not exactly a new thing. It's been going on for 30 years, right? And the fact that, it escalated was months ago, and the fact we may get involved is old news. All this stuff is old news. So to think that all of a sudden, the day something happens, that now the market is so stupid, it's just going to react and go, oh, there's a war going on? Oh, gee, maybe we should do some oil price. That's the problem is you don't know, and I've covered this when I talked about news before, is that number one, you don't often know what good or bad news is. Number two, you don't know what's built into the price. And number three, there's a knee-jerk reaction that adjusts the price immediately to what it should be. And who are you to say where it's going to go from there? So some news stations do this, is that they go and they give the reasons. Now, if you read this, the reason is just idiotic. They try to explain to their viewers how smart they are. This is Reuters. It doesn't matter who it is. But they're down, and the reason it's down is because Iran took no action after the strike. Now, think about how stupid that is. This is a day afterwards, right? Oh, so that means they're not going to take action tomorrow, next day, a week later, a month later? You're clutching at straws. They're trying to explain what's going on. In this particular case, I rarely see this, but this article really just didn't give a reason. They just kind of stated the fact, which is what they should do a lot of times, is just state the fact of what happened, didn't try and project what happened. And if you listen to some news shows, this is funny because as this kind of happened in real time, this came up very quickly, and news prices plummeted, and nobody knew what to say. I actually heard a news show that I listened to actually stand there and say, they use the word dumbfounded. We are just dumbfounded why this is happening, right? Stuff like this happens all the time. So the point of these slides here, just a reminder, was such a great example with this whole oil thing coming up, that there is no way, you can read about oil, you can be the oil guru of the century, you can study all this stuff, and you can have whatever you want, all the fundamental research you want to do on oil, and it wouldn't help you a darn bit in terms of what's going to happen, because I challenge you to find a single article, person, place, thing, or anything that projected oil prices falling if action was taken by the United States. I challenge it because I did. Before I did this, I said, okay, who got this right? Nobody. It's all after the fact analysis. So it's just an example. The section on oil, just a reminder that you may listen to the news as a human, but as a trader, all the financial shows and economic numbers will only harm you. They will. And I just want to remind you, I've said it in other events and on podcasts and stuff, that the reason you get fooled sometimes is because, and I don't mean like you personally, but the reason that people get confused is because so many times the news comes on afterwards and explains it to you, and you go, oh, well, yeah, now I see. I need to listen to this to understand that. But nobody said that ahead of time. They're just making up stuff after it happened, right? It's just like right now you would say, oh, okay, what did I learn from this? I learned that if the U.S. attacks and the country doesn't react in 12 hours, that prices will drop. Well, that's not the lesson learned from this. It's just what happened. Probably because prices already made some adjustment. If you look at the chart, it really didn't look like there's a big adjustment. It's just a non-event is all it is. Charts are the reaction to what happened. It is the truth, and often show the built-in expectations. New news is often old news to the market. So that's a fairly simple one. No big deal. I think that's the end of the oil thing. Right on time, 10 minutes, done with number one. Number two, Tightropes. You probably enjoy this one more. This is about charts a little bit. And again, this kind of emphasizes a point that I have made several times. I just want to keep reminding you about this point, and let me be very clear about this. You're probably confused about what Tightropes meant. I often use this to simply describe a chart with a very tight sideways pattern. This was the QQQ on yesterday. It gapped up a bunch. And look at how tight that was. I mean, this is just a crazy, ridiculous sideways pattern. And I'm running in the room, and I literally thought in my head, I think I was going to say the words, wow, what a tightrope. And somebody in the room actually typed, literally typed those exact words, wow, the market is like a tightrope. So the point of the tightrope thing is, what do you do with that? What do you do with that pattern? If this is the only chart that you look at, I'm sorry, but that's pretty much untradeable. And I know you could tell me after the fact, what you would have done, but I'm sorry, I think most people would have shorted that right there. I don't know. I think a lot of people might have gone long right there. But and then you might say, oh, I knew it was going to be a sideways pattern. Well, okay, I could maybe see shorting that. I don't see going long that necessarily. It's just you don't know what to do with patterns like this. Now, my point simply is that this is where I talk about where I feel there's a big edge to stocks. And I want to just review that one more time. I like trading futures, and let me make it very clear that if you are a futures trader and you're making money doing that consistently for a period of time, that's great. Congratulations. I'm not knocking you at all. What I am knocking are people who trade futures for the wrong reason. And the main reason people trade futures is because you don't need a large account. You can trade with a very small account. And there's a stat out there that's 93, 94, 95% of futures accounts under $10,000 never make money. They just keep getting replenished. Lost $5,000, put it back in, put it back in, put it back in. And there's a reason for that in my view. Again, let me say it for a second time. I like trading futures. I have no problem trading futures. And by futures, let me clarify that also. Futures are tradable in a lot of things, from corn, Eddie Murphy and orange juice and gold and oil and all kinds of things. But typically when people say futures, they mean trading the market, all right? Just so you know what I mean. You can trade futures and all kinds of things, that's great. But I'm talking 95% of people are talking about trading the market using futures. The ES futures, the NQ futures, that's for the S&P and the NASDAQ. So trading the market through futures has its advantages. It's super simple. There's no prep to do. You can trade a much smaller account. That's all great. But here is my one big problem. See that number that popped up there? Wasn't that cool the way that popped up there? I don't know where that came from. Look at that. Boom, 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 boom. Yes, well, Jack, that's what I mean, leverage. Yeah, I mean, yes, small account and leverage, right? Those are two different things, really. And those are big advantages. Those are nice, right? But being able to trade with a small account, right, and having leverage, right, both are no good if you lose money. And that's what a lot of people do. Now, for the third time, if you've been trading futures to make money, that's great. But I think if you're new and learning, there is a big disadvantage, and that's this 97% thing I talk about. Explain that, Paul. I will. You know what this guy is called? It's called a 3D stick man. I had a hard time finding him again. 3D stick man. What I mean by that is that the market is basically a random walk. People say that, people usually hear that coming out of people's mouths. They can't trade the market, that are losers, and they say, oh, the market's a random walk, nobody can trade it. Well, the funny thing is they're right most of the time. Most of the time, you pick up any chart and set it in front of me. And actually, you know what? I was going to do this. I think I marked this down. Yeah, I did. I might do this as the event next week. Is pick any chart and set it down in front of me, and I can make you lots of intelligent comments. I could give you what it did in the past. I could give you lots of what-if statements, like if it were to do this, then I would do this. But I wouldn't take a trade on 97% of the things you put in front of me, because what are the odds, that it's just going to be set up right? When you look at all the things that we want to have come our way when we are taking a trade, and we're talking about the overall chart setup as it occurs across multiple time frames, at least 4 different time frames, the exact entry criteria being right, the market timing and market relative strength when it's applicable. And you look at all these things happening, coming together. It's not that often you pull it off. And what I like to do, to me, is that if you start off with a funnel up here with a whole lot of stocks, and a whole lot can be whatever you want it to be. It could be 100 if you want to keep things simple. And then you filter it down to what you consider the best 5 are, guess what? You have the top 5% of the stocks in terms of what you like to look for, what you're doing. I start off with 1,400 probably. Don't get scared. It takes me like 25 minutes to go through all those. And then I filter that down to maybe 15 or something, depending on what you mean by 15. But how can you argue that that is not the best set of odds you could possibly have? If you're trading the market, you're trading one thing. There it is. So to me, that means 3% of the time you're going to have a great trade. So what do? You end up forcing trades. If you are trading futures, you're not successful. It's likely because number one, I mean, maybe you're not even trained to trade. But even if you are, let me put it this way, I don't have the patience. I think I'm more patient probably than most people listening to me. I don't have the patience to trade just the futures. When the market sets up perfectly, great, there we go. There's a market trade, however you want to do it. But when the market doesn't set up great, what do? Do you wait for 3 days until it does set up right if you're a day trader? Do you just not take a trade? Do you force a trade? What do? So that 97% is not a made-up number, actually. I know I goof around making up percentage numbers all the time, but it's actually a real number because if I go through 1,000 stocks, I flag less than 30. And that's not trades. Those are just things that I'm interested in. So when you talk about, how many do you look at before a trade comes about, you're talking about probably 0.2, 0.3% of the stocks I look at end up being trades. And that filter down process to me is where you get your odds. Somebody just sent me a question. A seminar student sent me a question. And he had it analyzed perfectly. And the question was, do you try and make a trade out of this or move on? I'm just like, hey, it's a stock. Next, go to the next symbol. Go to the next chart. Why try and make it work? Wait for the thing that you want to see. So when we were doing this, yesterday, to me this was, I'm not even looking at this. I'm not even really caring. I use the market as kind of a backdrop to have maybe a little bit of a bullish or bearish bias. But the ideal thing is when you get stocks that are just on their own page. So here's what I did yesterday when the market was doing that. And this was a tier 1 gap happened yesterday. I found, okay, I didn't find this. Is he here? No, he's not here. Okay, if you're in the room, do not tell him tomorrow I mentioned his name. I'll say I found. Mirnus, who is my backup moderator now in the room, found this gap. I didn't see it, and it was maybe 10 minutes before we're going to open. It was a tier 1 gap. Just traded this, and this is pretty much right out of the open. It gave the right entry. That was the entry. That's target 1. That's target 2. Made, 1.5, almost twice the day's goal in 30, 60, 90 minutes, 60, 70, 80 minutes. Ta-da! That's it. So simple. Here it is. Piece of cake if you know what you're looking for, as opposed to, really? I have to trade that. Now, naturally, there's different things happen on different days. There's some days, like today, I put in the market letter, it would have been to short the high today. And I didn't do that. Sometimes I get stupid too. And I ended up with, on the wrong side of things with a couple of what I thought were unique longs didn't work. So sometimes it works against me. But for the most part, having this to me, I think is a huge advantage to say, here's the market, here's the bias for the day, here's the likely high and low for the day, and now let's find some stocks to really amplify what we're doing. Another quick example, I didn't trade Thursday or Friday, so this is only a couple days ago to me. Pepsi. I called the market dropping here, and what did I do about it? I took Pepsi long here. Just to me, it was a beautiful chart. It was a beautiful, you don't see the whole thing, you don't need to, you can look it up, it's Pepsi on the 18th. It was a beautiful sideways chart that had a support area here and it had this beautiful entry to me, had an absolute target. Took the whole thing right to target, made 1.5 hours on it in an hour and a half, whatever that was. And in this particular case, it says here on Pepsi today, I could have traded the market because I thought the market was a pretty good short. Could have traded the market. I probably made a little bit less, maybe about the same. But I traded Pepsi. Back here on this trade, I couldn't have traded that market. There's no way. And even if you did trade it, you wouldn't have made much money, if anything at all. Home run, though, on the NEXT. So that's section number 2. Are there any questions on that? I've mentioned it before. It's just a reminder. And as always, I always say that there's different ways to do things. And if you're making money, that's great. I'm just talking to you if you're struggling and you can't figure out why and you're sitting there trading futures and you've refunded your account 7 times in the last 7 months. All right? Any questions on that? You guys are very respectful because oh, what's hysterical? Look at this. I got to move this forward. Look at that. It should be 523 right now. Oh, I should get a boom for that. It is 520. Well, it's 522. Shouldn't have. Well, technically, I wasn't supposed to advance it that quick, though. So I'm going to move on to Psych if we don't have any questions. And you can ask some questions here. I know we're on a quick pace because it's a little impromptu 30-minute event. This is nothing more than a comment to you about Psych. Somebody had a comment on Psych. If you want to type that again, I had a comment for you if you put it out there again. Quick chat, it should be 5:23 right now. It is, Paul, it's 5:23. Sometimes a few words helps. Psych is funny. Psychology and trading, it's funny. Because sometimes a sentence can totally change you. A sentence can totally change how you trade. Something snaps in you, right? And I've had that experience all the time in the seminar program where somebody will say, well, that was a great day today, but you know what? Well, actually, they say it like a month later. They'll say, you know what? Back in that course on page 77, you had that little DTS tip, blah, 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 blah. It says the weirdest thing. I read that, and it changed my career. Just that tip helped me so much. One of them, for example, was it's the simplest thing. You can't hit big targets and preserve every penny of profit at the same time. Somebody said that back to me and said, you know what, that's just changed, it changed my mindset because that's what I was doing. And there's so many times that you can say a few words to somebody and it totally changes what they do, right? I get this experience a lot. Some seminar people I don't hear from much at all. It's usually good news. Some people stay in touch with me regularly, and then I know how they're doing. And the ones that stay more in touch with me, they kind of get amazed sometimes because I will predict what's going to happen to them. And sometimes it's not good news. I'll say to them, hey, you're doing great, but you know what? Down the road here in the next couple months, you're going to hit a huge hiccup, and you're going to email me back, and you're going to say, what the hell happened to me? And they do. And they say, what happened to me? And I explain what happened to them. But from people staying in touch, I know for myself the psych issues. I know from people staying in touch the psych issues that they go through. Let me see. Before I go on, let me just take your comments here. Psych is trading without emotional feeling. Andrew, I disagree with that. And the reason is because you cannot turn off your emotions and feelings. Good handling psych through good trading is properly dealing with your emotions and feelings, so to speak. Is properly handling things. And the secret to handling psych, if you will, all psychological problems, is building through incremental risk progression and through practice and gaining confidence through a well-documented trading plan is how you overcome psych issues because you become more and more mechanical. You can't eliminate your emotions. And when you try to do that, it just makes it more frustrating. I can't rely on winning trades. I get into really beat myself in everything. Yes, they are. Well, Lope, here's the other thing, and thank you. Here's my big thing on psych, Lope, is that, and I had a whole presentation on this. I forgot what it was called. It's called Don't Call It Psych or something. I have so many people coming to me and say, oh, Paul, I'm a good trader, and Lope, this is maybe you. I'm not saying it is. But I have a lot of people come to me and say, oh, Paul, I'm a good trader, but I have psychological problems. And then they show me what their psychological problems are, and they're not psychological problems. What are they? Somebody, quickly. I have 5 minutes. What is the problem with a lot of people who say they have psych problems? Yeah, they can't read a chart. They don't know what they're doing, right? If you don't know what you're doing, right, Jax, yeah. But if you don't know what you're doing, how can you say with confidence that's the target, right? So some people will say, oh, I got in this trade and I got out there and it went to here. It's a psychological problem. Well, probably not. If you have no confidence because you don't understand charts, if you have no confidence you're getting to here, then naturally you're going to go crazy here, right? But when you have confidence to say, like, just for example, go back and look, tier 1 gap. I'm not afraid of this thing, right? There's a zillion places in here somebody might have got out if they didn't have, I took it all the way to the top, if they didn't have the confidence to say, you know what, hey, that's going there. Now, if you don't know that, if you don't know the chart, then you get out early and then you say, oh, I'm a good trader, but it's a psych problem. So, Lope, I don't know without seeing, what you're doing. Where am I? So I don't know without seeing what you're doing. But psych problems are defined as you don't do what you set out to do, right? You have a plan to do something and you just can't do it. Now, if you don't know what to do, then you don't have a psych problem. Because you can't say I didn't do what I was supposed to do if you don't know what you're supposed to do. Does that make sense, everybody? That's good, Jimbo. Yeah, I mean, that mentality is actually a good mentality as long as you keep it under control. That's really excellent because you understand odds and probabilities and psych to some degree, right? So hopefully that was helpful, Lope, a little bit. So let me finish my one point here. And maybe this helps you if I confess something here. It's not a confession, you should know this. Even for me, after all this time, after a good day, which most of them are, you look back, right? All of us do. I look back and I say, how could you ever have a losing trade even, right? Forget a losing day. How could you have a losing trade? How is it even possible? It's so easy. You just do this, you do that, you do this, and that's all you do, right? Yeah, exactly. Yeah, it's Kenny Rogers thing. So you have that mentality right after a good day. And then after a losing day, the same person, just one day, and you go, holy cow, what happened? What's going on, right? Don't feel bad when you feel that way. That's just kind of a normal thing. Understand if you're a good trader, you're making money, you're going to have an off day once in a while. Because I want to remind you that, and he did a whole presentation on this also about risk aversion and all this type of stuff. Remember that, for most traders, and everybody's a little different, but most traders probably bat around 50%. And then their winners are bigger than their losers. That's where they make their money. But even if you're at 60% or so, and a scalper would probably be a higher percentage. But even if you're at 60%, this is a little bit off. But if you are bad 50%, it means that 1 in 8 times you will have 3 losers in a row. And 3 losers in a row probably pretty much shuts your day down, right? It's pretty much, okay, wow, bad day, see you tomorrow. But just by the odds, even if you're a good trader, now naturally if you bet 60%, I'm not good at statistics to figure out what that would be, but there'd be a new number for you where that would happen once every 4 days or whatever it is. But the point simply is that we trade probabilities. You're going to have some losers, and statistics say the losers can back up one after another sometimes, and it makes you feel like an idiot, right? And that's why I've done presentations on how to handle a losing day. If you're a decent trader, how do you handle a losing day? You don't do a damn thing. You go back tomorrow and you swing just as hard as you did today. And remember, there's only 2 times you have psychological problems. Only 2 times. And that's after a winning day and after a losing day. Because after a winning day, you feel like a trading god, and you just want to, trade everything you see during the day. If you've had a good morning, you want to keep trading because you feel like a trading god. And of course, if you start off losing, you want to do everything you can to erase that red, and you start taking low quality trades. And that's something you really got to try to avoid. Something I'm pretty good at avoiding. I start off bad today. I don't add to it, don't compound to it. If a great trade comes up, great, take another shot at it. For the most part, you got to say some days, hey, had the wrong things today, didn't do it right, whatever it was. Let's just shut down, come back tomorrow, and today's not a big deal. Any questions, anybody? It is exactly 5:30, so I will take some questions if you got them. Remember, there is a site at DTS there with more to do, including podcasts. And this really surprised me. I guess maybe it shouldn't, but people really love these podcasts. Maybe newer people. A lot of new people come to DTS from the podcast. I'm on number 63 or something. I won't be doing one this week. I've been kind of doing them every other week. If you go to the home page, it's just under more to do. But here's the link if you want to go there. And no questions? And this Friday, we're going to get together for the Introduction to Mastering Technical Analysis class. If you've been through it once, I suggest you come back and go through it again. If you've never been through it, you want to go through it. All members are invited to this. It is the first day of the seminar program, but I invite all members to it, even if you're not in the paid-for seminar program, because I'll explain why the day we're there. There's a lot of great information. It's not a sales thing at all. It's good information. It's required for the seminar students. So you'll get information about that tonight and tomorrow probably. And then after that starts the seminar program. If you've been kicking around taking the seminar program, email me if you want to talk about it. Get on the phone or whatever you want to do. I'll leave that slide up there. Any questions? Thanks, Tag. All right, everybody. If you're in the room, I'll see you in the morning.